Hi guys, this is Bridget and Richard. As I promised you guys yesterday, I was going to give you some important information about how to get out of credit card debt. But first of all, I want to thank God for the opportunity and the wisdom and knowledge that He has granted me, and to be able to share what I have learned, to be able to share with you so I can help you guys get out of debt. So let's take an example. I know that a lot of us have a lot of credit cards, all on different balances, and we're paying different amount of interest rate. Right. We all know that. But let's take an example that you have a credit card of $5,000. Usually credit cards with $5,000 are either between 18 to 22%. That's usually the average. So let's go to the highest so we can all be on the same page. If you have a credit card at $5,000 paying 22% interest, and you only pay the minimum payment of $120 a month, it will mean that it will take you 79 months to pay that credit card off.
Correct.
$91 out of that 120 is going strictly into interest, and only $28 is going to your principal. So by the time you actually pay that credit card off, you're paying $9,400. $4,000 of that is towards the interest. So you're actually paying that credit card almost twice.
Right.
So Richard has some ideas that he wants to share with you, so you're able to save that interest and you'll be able to have more money in your pocket.
Hello guys. First of all, what we want to do is put ourselves in the best financial situation possible. Okay? And when we learn little strategies, tips, and tricks that involve our credit, that is how we do it. Credit is a tool that is to be used for your benefit, not for the credit company's benefit. So you have to understand that when you are paying these high interest rates and you are paying the bare minimum every month, what you are necessarily doing is working for the credit companies. Okay? So
sounds ironic, but it's true.
It is very true. It's very true. Just think about it. If you are paying double what your credit limit is, you are working for the credit companies.
Correct.
That money can be better utilized for you, for events or college funds, so on and so forth. All right. So what we want to do is stop putting our money into the hands of the credit companies. And also, leading into our tip for the day, you want to stop putting your money into the hands of the banks.
What do you mean with that? What do you mean the bank? That's where everybody deposits their payroll check.
It is. And it is the main reason why a lot of people are not receiving the benefits that they could from investments or just from being able to save money from the interest that they end up paying towards their credit cards. So what you need to do is, instead of taking your money that you get from your paychecks every week or bi-weekly, instead of putting it into the bank,
okay,
what you want to do is deposit it into your credit card.
Wait a minute. So the direct deposit that we get from our company, from the company we work for, once it gets deposited into the bank, take that and pay everything to the credit card.
Correct.
Why is that?
Well, there are a number of benefits that you get from when you do that. All right. One, when you deposit your entire check into your credit card, what you are doing is still paying off your monthly credit card bill. All right. Two, what you will be doing is driving down your debt to ratio.
True.
When you're driving down your debt to ratio, guess what happens? Your credit score increases. All right. Not only does your credit score increase, but it'll put you in a more favorable light to these credit card companies that might want to extend you further credit. All right.
So how do I pay my normal bills? Because most people deposit their payroll check into the checking account, and then they pay the light, the phone, the gas, the food. They paid everything from the checking account. So correct. Eliminate the checking account and pay everything from our credit cards?
Correct. This is what you want to do. Because basically when we go out shopping or we pay our bills or so on and so forth, because majority of us do our business online, you're using your credit card anyways.
For almost everything.
All right. So instead of paying the bare minimum to your credit card and putting the majority into your bank, what you want to do is reverse it. You want to put the majority into your credit card, because your credit card is what you're going to be using on a day-to-day basis anyways.
Anyway, that makes so much sense. If you guys want to know the amount of months that it would take you based on the credit card that you have and the balance and the interest that you're paying, go to my website, lendingboard.com. On the right-hand side of my website, I have installed a calculator. And that calculator will be able to provide you with the information that you need to be able to know how many months it's going to take you to pay off your credit card. Second, on my website, you'll be able to find all the information that you may have, like credit funding, credit repair, which we're also going to do some other videos on that, how to invest your money once you have good credit, how you're able to get that money from credits that will be able to provide you with a higher credit line,
exactly,
which is credit funding, and use that money towards your benefit and investment. So take a minute and go to lendingboard.com and see what are we able to help you with. Again, remember, the best is yet to come and more information is on your way. Thank you. God bless you and have a wonderful day.